Hey everyone, this is Kirk here again at OptionAlpha.com, and tonight I wanted to go over in a little bit more detail what's happening in Europe. Now, today, of course, we heard the big news that they slipped into yet another recession for the second time in 4 years. Now, really, does this come as a surprise? I mean, honestly, we knew this was going to happen, right? I mean, they've been working nonstop, day and night, to prevent this from happening with all of the packages and everything they've been trying to do. But yet, here we are. We've just turned the corner, even though we've only slipped 0.01%. We're still at negative growth. The forecasts are for negative growth. This isn't looking good for over there. They've got to do more, and they've got to do it quicker. And I think it's just real. Honestly, it cracks me up. It really does crack me up sometimes that all of this work that they've been doing is to prevent this type of thing from happening, from the bailout packages to the debt restructurings to the write-downs. And yet here we go. And it just really goes to show you that the broader economy is not going to take a lot of this phony money stuff that's just being messed around and toyed around with. So that's the big news for today. The things I wanted to cover here before I get to the charts are a couple of the actual charts. And these are both from Thomson Reuters. They do a great job of just presenting great information. So I grabbed some of these charts off of their website here, but I wanted to show them to you. The first is the growth forecast for 2012 GDP for most of the areas in the Euro region, primarily the bigger areas that we're more concerned with, right? Spain, Portugal, Italy, etc., etc. Notice that in the previous years, where growth was Spain, Euro, France, Ireland, UK, even though the UK is not necessarily in the Eurozone, they're the European Union, that all of these were actually higher, right? Italy, Portugal, Greece were negative, but we knew they were negative last year, right? That was going into it. But look how decisively negative things have turned since for the new forecast going forward, end of 2012, and even really as we start to get into 2013. Germany, lower growth. UK, about the same growth. Again, they're not in the zone, so they're a little bit sheltered from this. Ireland, lower growth. France, the Euro area as a whole, negative growth. Spain, considerably negative. Italy, considerably negative. Portugal, Greece, very negative. And so you have to think to yourself, what good are they doing over there right now? And at least, how is that going to react to the market? So I think we're still going to see very depressed prices. This is going to be a continued shockwave that's going to start to roll over across the ocean to hit us here at home in America. Obviously, we're in such a huge global economy that what they do over there has definitely rippling effect over here. When you start to look at the Eurozone composite of managers and kind of the year-over-year change, and what this is just showing is, what's kind of managers and CEOs, what's their index and their thinking about market sentiment. It's similar to consumer sentiment, etc., but it's kind of the managers, CEOs. Again, you can see quarter over quarter, we just started to again dip with GDP in the blue, but now we are definitely heading in the wrong direction when it comes to sentiment, purchasing managers index, the amount of goods that are being bought in the European Union. So I think this isn't good. We've had two instances before where they have definitely slipped as far as the manager index, but we haven't really seen GDP growth become as negative as it has been. So I think now that we continue to see negative and negative growth, not no growth, but negative growth on the GDP front, then we definitely need to start worrying about this type of thing happening here, where negative growth really accelerates and things get bad very quickly. We've been on the edge, but things might get bad very quickly. So you need to position yourself accordingly. If we actually get back to the charts today, and we're going right here at the Option Alpha platform, we've got this great charting tool that's right in here for all of our members. Everything you can possibly need from charts, indicators, you can compare everything, you draw all over these charts, it's great. But if we just take a look at the SPY or the spiders, you can see we've had a very tough time in the markets, right? And some would even argue that we've already completed what looks to be a very clean looking head and shoulders pattern on the SPY. You can see that here's pretty much where the neckline is, and then you've got these two shoulders right here, followed by the head, which is right up here, right around the middle of October. So this is the neckline. We've considerably broke it, retraced up here, which is exactly what I said we'd do, and now we continue to fall away. What's actually really interesting about this right now is that I think that momentum has reached kind of a capitulation point where we've seen continuous negative momentum, almost to the point where we've gotten very close to the bottom of momentum, right? We're kind of reaching a point now where we're falling too fast and it's unsustainable even for falling right now. So I think short term we're going to start to see a little bit of a bump up in prices. If I just zoom out so you guys can see kind of the more broad-based pricing here, you can see that last time we got in this area, which was back down in here in May, you can see that we had a nice bump in prices. Same thing back down in here last year before the end of the year, or in 2011. Same thing where we actually got this kind of capitulation and momentum where it just got really overextended to the downside. So we're getting close to that point where I think we start to see some buying coming in and definitely at least a little bit of easing on the selling pressure. So make sure that you adjust your portfolio accordingly. Make sure that you're starting to take some of those shorts and some of those puts off, or at least starting to protect them, and start to think about selling put spreads, buying call spreads, buying outright puts that are out of the money, and using those as a way to make some money back if you've lost any during this little sell-off that we've had. So as always, hope you guys really enjoy these videos. Please check us out at optionalpha.com or add your comments right below. Tell me what you think about this whole Eurozone situation. Do you think that's just a fluke? Do you think it could get worse? I'd love to hear what you have to say in the comments. As always, hope you guys enjoy and happy trading.